Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news that tomorrow will be as good as today, and that will stay like that for a while, but more international data is softening. US mortgage applications decreased yet again last week, and that was even though mortgage interest rates slipped a bit. But last week's survey of retail activity remained strong, expanding faster than the prior week and holding on to the momentum they've had since mid-2021. And then there were two PMI reports out for the US factory sector overnight, and both are recording a continued healthy expansion. The widely watched local ISM one reported a faster expansion, while the internationally benchmarked market one recorded a slower expansion. And they are backed up by the Fed's monthly Beige Book survey, which also recorded modest to moderate growth in almost all their regions, but with hints of slowing conditions. Also confirming the continuing expansion in the US are American jobs data for April. The number of job openings in the US was at 11.4 million at the end of the month, down from a revised record high 11.9 million in March, matching expectations from the market and suggesting firms continue to struggle to find and hire new workers. For all this positive data, it's probably worth noting that Jamie Dimon, the boss of JP Morgan, fears a hurricane is coming for the US economy, but not until consumers use up more of their savings that are backing up the current consumption levels. Within a year, he thinks. For the third consecutive time, the Bank of Canada raised its official cash rate, this time by another 50 basis points to 1.5% and matching market expectations, and signalling that they will hike interest rates further in the coming meetings to curb rising inflation. And Beijing has ordered state-owned policy banks to set up an 800 billion yuan line of credit for infrastructure projects as it leans on construction to stimulate an economy battered by the coronavirus lockdowns. In Australia, there were two factory PMIs out for May yesterday, both reporting slowing of their good expansion levels to back to more modest levels. And Australia also reported its first quarter 2022 economic growth rate yesterday, and it came in at 3.3%, which was better than the 2.9% expected, but a step back from the fourth quarter of last year's rate of 4.2%. One thing analysts have picked up on in this GDP result is that Aussie wages and consumption were tracking higher than other separate measures suggested, and that probably means the RBA is locking in a substantial 40 basis point rate hike next Tuesday. The US Treasury 10-year yield will start today up another chunky 9 basis points at 2.94% on the strong US data. And the price of gold is up $1 today at $1,846 an ounce. And oil prices are marginally firmer from this time yesterday, up 50 US cents, just on $114.50 a barrel in the US, while the international Brent price is unchanged at $116.50 a barrel. And the Kiwi dollar will open today down another quarter cent at 64.9 US cents. Against the Australian dollar, we're down to 90.3 Australian cents. Against the euro, we're a little firmer at 60.9 euro cents. That all means our trade weight index starts today little change at 71.9, and that's because we rose against both the yen and the English pound. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.